Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing and rejecting to the upside a quite strong level of monthly support and demand from a historical standpoint. In fact, this area was already acting as resistance all across this zone. Every single time that the market tested this area, it rejected it to the downside quite aggressively. And now the market has broke above the zone. And what we know is that previous resistance, once it is broken to the upside, it is turned support. And the market has here already tested this previous resistance turned support and is currently rejecting it to the upside. So from a monthly standpoint, everything seems quite bullish. The market is rejecting strong historical monthly demand turned support because it was previously resistance. And in a situation like this, there is definitely the possibility of seeing this bullish trend from a monthly standpoint continue. If we drop down on the weekly time frame, what we can notice is that clearly we currently have a range-bound market from a weekly standpoint, with the bottom here currently acting as support and the top here currently acting as resistance. In fact, what we can notice is that already twice the market has respected this high here as resistance, and now it is currently rejecting the bottom here that is currently acting as support for the third time. So the next logical step would be for this market to go higher and to go and test the high of the range. Now, from a long-term perspective, unless we will see a break above or below this range, for the foreseeable future, we could expect to continue to see this market creating horizontal price action in between these two levels, which are currently the high and the low of this weekly range. So here on the weekly, the market is currently testing support. So also the weekly time frame seems to suggest that more bullish price action could be expected away from this level, as we have already seen on the monthly time frame. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, we must identify the structure. And the structure here on the daily has actually just broken to the upside, because what we had here is the creation of lower lows and lower highs. Now, the market just broke above the previous resistance. So these two levels, which were previously acting as resistance, which we can easily identify with this box here. And we can see how from this level already twice the market got rejected to the downside, therefore was finding resistance at this zone. And now the market is breaking above the level. Now, if this break to the upside will be successful, so if the market will successfully manage to complete this impulse to the upside, breaking above this resistance, at that point, all this previous resistance would become support. And if we get the break on the retest of the previous resistance turned support, that is where we have good probability of getting more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level, because also here on the daily, this previous resistance would become support, and we would actually have confluence of support, because at that point we could take our Fibonacci from the low to the high of the impulse leg, and we would have the 50% and 0.618 Fibonacci retracement levels in confluence with that previous resistance turned support, therefore creating confluence of support, because you have multiple layers of support in the same area of price, and that increases the probabilities of seeing institutional longing. Now, speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and let's check the data precisely for gold. Now, if we check the data here for gold, what we can notice is that with the last reports, we went from having 131.1k net positions all the way up to having 246.2k net positions. So we just saw a massive increase of net positioning, meaning that institutions have been moving back to the bullish side for gold, increasing their longs and decreasing their shorts, which are currently sitting at a very high 284k longs compared to only 38.6k shorts. So clearly institutions are positioned aggressively to the bullish side for gold, making it stronger. So if the market here will manage to break this resistance and go for the retest of the previous resistance turn support, inside of a confluence of support areas, since institutions are already positioned to the bullish side for gold, that would increase the probability of seeing even more institutional longing inside of this confluence of support, therefore increasing the probabilities and loading up the market for a potential rejection to the upside. So if we get this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the CO2 data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.